So much to get to today. We're going to begin, though, with Josh Brown. We have a halftime trade alert for you.
Trade alert.
Trade alert.
Come on.
How do you like your toast? How do you like your toast?
Toast is a stock that I started to buy very slowly a few months ago. I doubled my position this week. It's actually an average up. My average cost was low 20s. Now it's, I think, 23-ish. I'm not sure. But anyway, the way I was taught, growth stocks, you want to buy them on the way up, not average down. You want to buy them when you get confirmation of what you thought was happening is actually happening. And the last time they reported earnings, and a lot of analyst reports since then, have a lot of confirmation that this has the potential to be one of the great growth stocks. So it's going to be very volatile. Nobody should follow me into any stock, especially not this one if you can't deal with a high beta. I think it'll be almost twice as volatile as the overall S&P 500. It's tech. They haven't had a full profitable year yet. It's growth, it's high multiple. So if it's not your cup of tea, please don't hit me about this. If it's down $5, I can't do anything for you.
Yeah.
But
I mean, it is. But speaking of, just real quick before you continue,
yeah,
it's only about 40 cents away from a new 52-week high. So, I mean, the stock's had a nice move.
So that's what I want to get into. Give me that chart, but put it on Patty, put it on the whole screen. My opinion. This is how professionals in this space buy stocks. They're not looking to pay the lowest price. They're looking to buy confirmation of strength. The stock is about to break a 52-week high here. It's not an all-time high here, but there's a fundamental driving reason for why that's the case. They were written up in Barron's over the weekend, several buy recs over the last few weeks. Everyone is talking about this concept of the TAM being bigger than what the market originally thought. It's $600 billion in annual restaurant spend. Restaurants are standardizing onto this technology platform because there's too much worker turnover in the industry. You need to be a restaurant owner bringing in people who know how to use the software. We're not just talking about reservations or billing. Toast has like 30 or 40 different products that restaurants all over the world can standardize on. They have a new deal with Marriott. All of the restaurants and dining facilities in Marriott's can be equipped with this software, this equipment, and I think you're going to see a lot more of that type of enterprise deal rather than just hand-to-hand combat trying to sign up one diner at a time. So as you see that, I think the company's earnings estimates will continue to be ratcheted higher, and I'm not saying it's cheap. I'm not saying it can't rise and fall. I just feel like it's a really interesting way to play the consumer's predilection for experiences rather than goods and not have to pick any one particular publicly traded restaurant chain. I love them all. Don't make me choose between my children.
The Josh Brown boost is what that stock is getting right now. As you see, it's up better than 2%. And we'll keep our eyes on it for the remaining 56 or 57 minutes of our program. But there's Toast getting a lift. Not the only one buying either, by the way, Steph. Bank of America, flow trends, clients bought U.S. equities for the third straight week. Hedge funds and institutions were buyers. Was Stephanie Link a continued buyer selectively into this market?
Yes, and we're going to talk about it in the B block. So there's your teaser.
Okay.
But I think they should be buying. You know, by the way, the Schwab CEO just on CNBC last hour talked about how deposits are actually leaving and not going into higher yielding deposits. They are, but they're also going into the equity markets. So it really jives very well with what we're hearing from other companies as well as B.
That's one of the great points, right? And one of the great questions that we've asked, okay? If now you have money moving out of cash equivalents, out of treasuries and money markets and things that have been yielding 5% and have been so attractive now for more than a year, and if that fuels the next leg of the rally, because it has to come from somewhere, and maybe to your point, that's where it's going to come from.
$5 trillion on the sideline, so that's a lot of money. I don't think it's all going to go into equity markets, but it's very encouraging. And Schwab, the CEO, he would know firsthand, right? So I actually think the reason that people have more confidence in putting money into the equity markets is because of this whole soft landing thing that we've been all talking about. It looks like it's real. It's the consumer, it's jobs, it's wages, it's housing is at a one-year high. Autos are up 16.1%. Consumers feel okay. And by the way, today, the industrial production number is still really crummy, but you've had 4 months in a row where it's getting a little bit better, and I think the PMIs have actually bottomed. So now you're having this broadening happen in the market, which I'm thrilled about because that's where I am, and I'm in other parts of the market like financials and energy, healthcare, industrials. I am in some tech, but
transports, right?
Transports.
And I wonder if they're another tell of some sort of where the economy really is, right? Transport sector, a new 52-week high. You got UPS, things like that, but just in general, the signal maybe that we're getting from that move.
Right, absolutely. And you're going from a destocking cycle to a restocking cycle.